Great day for a Monday, right? How's the fishing been, Jack?
It's been great. Yeah. But I tell you, I discovered yesterday that I can only have trout maybe 2 or 3 nights in a row. And then I need like, you know, a steak or something. The river's right here. And I tell you, between 4 and 6 o'clock, if I haven't caught a bunch of fish by then for dinner, it's on. I got to get it in the evening like that. And right around 6, it's just been unbelievable. So
Nice.
I've been enjoying that. You ever do any fishing out there in Tennessee?
We got lots of lakes. I don't live right next to one, but I occasionally I go fishing, but most of the time I'm just stuck in the grind.
Yeah,
Um
yeah,
I I love doing this and I spend a lot of time doing it, quite honestly.
yeah. Good catfish out there. I
Yeah, we
really
got cat. I mean, we got beautiful lakes and stuff. I just don't spend a lot of time doing
cat.
that. Um, one of
Well, you
my
get out more, my friend. I'm going to encourage you to get out in nature and get some fresh air and catch some fish.
I gotta share this picture. Let me see. Let me share this picture. I've got, I have a 2.5 acre urban farm. Like I live right in the city here in Knoxville, and yeah, I picked up a robot mower to help me mow part of the field that I don't farm otherwise. Let me see if I can
Like a
send this over.
like a Roomba.
It's kind of like a Roomba, but it's a mower. It's wild. It's back to all this, technology and you know, do you self-drive? Do you let it mow? I mean, it's kind of
Yeah,
crazy,
it is
all this
kind of
stuff.
crazy.
And it just keeps getting more and more. Let me pull this
Yeah.
picture up,
You have
pop it out.
chickens out there?
I don't have chickens. Like I said, I'm right in the city, and even with an urban farm, they only let you have 6 chickens. That's not kind of any farm. But
Yeah.
you can see
Wow.
this robot mower here, right here in the corner, and the stripes he's putting on the field there.
He's
I got
doing
solar
it.
panels set up to charge the truck, so I don't pay for electricity to charge it. And so this is my neighbor's house. My house is behind me.
Cool.
I own the field all the way around his house. So
Nice.
anyway, there you go. So I do spend some time outside. It's just, not fishing.
Can't spend all your time staring at the screen, brother. I did that. It ain't healthy.
Uh, you know, I help my dad run an engineering company and we go do projects and all sorts of things. So,
Cool. Very cool. And you're still doing Boy Scouts? I thought that was amazing.
yeah, I've been doing that since I was 8 years old. So, my wife was like, gosh, what does that make him like? It's like good to be 38 years I've been doing Boy Scouts. So
Wow, that's
haven't
awesome.
quit yet. And my kids are all aged out, so I'm there helping young people on my own. So
Yeah, the kids need that Boy Scouts more than ever before.
yeah, I look at it being a good influence in helping build tomorrow's leaders. Helping these young people get on a path to hopefully be successful in life. So
Thing. Yeah, Pete L, I'll get back to you on that question there.
anyway, so Jack, and one of your trades you talked about, AVGO, right down here in the middle, in the guts.
In the guts. I'm taking it right in the gut. So for those of you who don't know about this trade, AVGO has been a good moneymaker for me. On Tuesday, I sold the 342.50 put, and I mean 342.50 put and bought the 340. And right now the stock is in the middle of my spread. So I won't do anything on this until 10 minutes before the close. That way there will be zero time value left in it, and it'll just be the difference, the intrinsic value. And if I think the stock is going to fall lower, I'll buy back the 342.50 and let the 340 run. If the stock is dropping below 340, I should be in a good spot. If not, my other choice is to do nothing if I think the options will be out of the money at expiration. That's the way I'm going to lean into it today. And my third choice would just to be to unwind it and take the loss. That happens.
All right. There you got it, everybody. That's Jack's plan. And when did you make this plan, Jack?
I made the plan. I always have my exit strategy when I get in. And that's something everybody should have. I always have the three same choices every time, but I kind of know what I'm going to do when I put the trade on. I believe everybody on every trade needs to know their break even and have their exit strategy when they enter the trade. So I'm going to kind of lean into this being out of the money, being above 342.50 today at the close. If not, I'll make my move.
Yeah, so I think that's an important point. You had your entire plan laid out before you ever touched a trading button, right? I mean, I know you don't, this is your trade, you didn't follow anybody, but a lot of people might be following you and not have a plan except to follow Jack. And that's, I mean, something could happen to you, Jack. I mean, you're a healthy guy, but gosh, we had a bear attack your Starlink there a couple weeks ago, and
Yeah.
could happen again and take you out, and you couldn't communicate, and then somebody might be left with no plan, and the no plan is not a good one.
I
So you should.
never I never leave people without a plan. So what I do is when I put out the alert, I also give you the three exit strategies and when you should use that. Because the worst time to make a decision is when you're already underwater or taking it in the gut. And then you wonder, well, I got to call Jack, whatever, I got to get a hold of him. It doesn't work like that. I give you the exit strategy up front. And the other thing we were talking about this morning is your trades have to be your trades. They can't be Michael's or Jim's or Joe's trades. You know, you can get the idea and you can get the alert from somebody, but ultimately you got to take responsibility for your own actions. And you want to know how you're going to get out before you get in, so you're not panicking and wondering, what am I going to do? How do I get a hold of Jack? And this is rare. I don't think we've had I can't remember the last loss I took in a credit spread. But it's just important to know what you're going to do when you get in and be willing to accept whatever can happen and take responsibility for your own actions, even if you got the alert from somebody else. Your trades are your trades.
And that may be the single biggest thing right there that you said between that I see personally between people that are successful doing this thing we do called trading and people that struggle is that personal accountability for what you're doing. Once you can own every decision that you're doing, no matter what, don't blame anybody, don't blame alerts, don't blame indicators, don't blame anything, don't blame the market. It's all you. Once you internalize that and accept that you're the driver, you're making every decision, good, bad, win, loss, whatever it might be, personal responsibility for everything that happens to you in the market. That seems to me to be the key differentiator between people that are good at this and make money consistently and people that just grind and grind and grind and keep losing and keep bouncing between other strategies and other things and it's always somebody else's fault and you're looking for the next best thing and that golden goose. Personal accountability, that to me is the single most important thing
No
that
question
differentiates
about it. And
that
it's
differentiates the people that do this for a living and make money and the people that just keep losing money.
That's exactly right. Yeah, it's got to be yours. And the other thing about it is when you take a loss, and you followed somebody else's trade alert, it's so easy to blame them, right? That Jeffrey Turnmeyer guy, I lost $3,800 following that. It's very easy to blame somebody else and not take responsibility for your own actions. And that's just not in trading, that's in life. A lot of grown people still don't take responsibility for their own actions. So Dennis asked about
That's
the,
true.
yeah, I mean, even adults don't do it. The buffer I had on this, Dennis, was we got to go back to Tuesday and see where it was AVGO
So here we are on Friday,
last
Thursday,
Tuesday.
Wednesday, and Tuesday we were right up here.
Tuesday, so 359 or 360, and my buffer was I was at 342. So by my stats, my way of doing this, uh, this is all normal. The only thing that's not normal is AVGO dropped a little more than expected, but here I am clean on the trade already just since we've been talking. So,
And
yeah.
we did have a little bit of loft in here. You know, you talk about the loft.
Yeah,
We did
that
have a
was the
little bit of
thing.
loft on this one. So
Did have it. Yeah. Um, yeah, the margin requirement mark on that trade is just the difference in strikes, which would be $10 times the number of contracts you use. So it wouldn't be margin if you had cash in your account. If you run out of cash in your margin account, then it would be margin, and the requirement would be the same as cash, $10 difference
that's
times the number of.
250, wasn't it? 342,
Well, I'm
340.
looking at Mark Berger had a question on Oracle. He
Oh,
said
okay.
buy an
Oracle.
October 10th Oracle 325 call and sell an October 10th 315 call with a 215 credit. What would be the margin requirement? It would be
A difference in the strikes.
$10 times however many contracts you traded. 10 clams.
And then add some zeros. So $1,000 per contract.
Yeah. Let's go back to AVGO for a second. I don't think this Oracle is going to hold up, guys. By the way, this thing, what people miss with Oracle is they're drowning in debt. You know, that's going to be close to $1 trillion here by the time they get it all sorted out. In fact, I think Moody's just downgraded Oracle's debt. Anyway, back to this AVGO. I'm not surprised that it's come down a little bit because that gap has to be filled in somewhere. But it's down a little bit more than I expected this week. But as I say, I'm clean on the trade right now and getting cleaner by the moment. So yeah, my risk is at 342.50. Here we are. We were below that. We hit 337 this morning. And what did I do when it hit 337? Nothing. Because you got to let it bounce around a little bit, right? You can never panic. You got to expect anything can and will happen in the stock market. That is a fact you could take to the bank. Anything can and will happen. So I'm not surprised. But like I say, I'll either close this baby out early, let it ride into the close, or play the hedge, cover the 342.50 short put and stay long. But that's only going to work for me if it really drops into the 330s. But that gap's got to be filled in going forward. So that's that.
Yeah, so at this point, you're doing nothing. You're just waiting, just letting it cook. And
I'm
right now, if the market closed, full profit.
full profit. And that's kind of what I'm counting on. And the reason is I'm 96%. I know what I'm doing and I have confidence in what I'm doing. That doesn't mean it works 100% of the time, but I can't remember the last loss I had. And whatever loss, if I took on this one, it wouldn't be anything compared to what I've made. So I think I'm good here. I think we're going to get a little stronger going forward today.
Yeah. I mean, S&P turning back to the green.
Yeah. It looked funky. We see so much change in this first hour. 2 hours. It's just nutty. But this market, it seems like it's pulling like a horse pulling on the bit, trying to get going harder.
Yeah, we gapped
So
up,
it's
but we taking it right back down. We
that,
actually filled the gap
yeah,
essentially overnight.
yeah, yeah, crazy. And I put on another trade. What's today? Two. Uh,
Today's Friday, the 19th.
Yesterday maybe, or the day before. I sold some more IBIT naked puts at 63.
Down here at 63. Let's go back
I
to the
got a
daily.
dollar 31. It expires October 24th. I got 12.1% doing it naked put on margin.
Nice.
12%. And the thing I like about it, doing it that way, I know you look at that curve, but the reason I like to do it monthly is, all my bills are monthly. So just like to set it up monthly. And if I can create cash flow in this month of September, and pick an expiration in October where I still have some calendar days to do the trade again, right? If I pick the October 31st expiration, I wouldn't be able to bring in cash flow in October. But if I picked October 24th, I could still make 12.1% between now and then that's going to give me some calendar days in October to bring in cash flow again. So ideally, I try to do this 11 to 12 times a year. Pays more than all the bills between the covered calls and the naked puts. It's pretty cash heavy. And I don't really need to worry about a position. So I love it.
This is a neat thing they just added where you can sort by strike and you can look at the
Oh, they
different.
got 50-cent differences there, huh? Wow.
Oh, yeah.
That's
50
man,
cent.
I love that because if you do a credit spread in this, you can get it so precise. It's almost like you just have 1 point, right? I don't like a $10 difference in strikes. There's too much room for the stock to settle in between and too much capital laid out, $1,000 on a 10 strike. Right? When you get a 50-cent difference, man, this is unreal. I'm loving this IBIT more and more and more.
So you're down here at the 63 out to, you said October 17th,
24th.
24th. All right there below it.
I got a
Two.
dollar 31.
And
So that was
today, a little bit richer today with a
Richard.
slight pullback.
Yeah. Now, Dennis asks if I bought back the short put on AVGO at the close because I thought the price was going to go below 340, that long put could run in your favor until late Saturday night. That's not true because I would not be able to sell that 340 and I definitely would not want to, assign it. I just want to sell it. But the way the assignment works on options is that the CBOE has until 11:59 Saturday night, right? It'd be tomorrow night at 11:59. So on Sunday, you might get an email 3, 4 in the morning that you got assigned. But no, it won't run in my favor after the close. If I had the stock, you could do whatever you want after hours with the stock because it still trades, but options don't trade after the close. Maybe in the future, but not right now.
That's not looking too bad right now, actually. No, you still got a lot of credit on it, but just a $2 pop is gonna erode that very quickly.
I'll tell you, one of the things I watch when I look at these credit spreads is how much these options start to erode in value, like close. Like you look at this $1.91, right? On that 342.50, that thing is going to drop, which to nothing pretty much, which when I look at $1.92, I want to short the call. See there, it just went to $1.85. And that's what happens because the last week of expiration is the most time decay kicks in. So now we've got not even a full day until expiration. So you could watch that 342.50. It went from $1.90, whatever, $1.91 to 185. And as this stays out of the money, that's going to keep going down that 342.50. And it's all I can do not to short these things when I'm watching them go into the close because you watch a thing go from $1.80 to zero, right? It only looks like it went down $1.80, but it went down 100%. So there you go.
There you go.
Yeah.
This is it's just fun stuff to sell credit.
Especially now. Nowadays, I've never seen a time, like I say, when options are so high. And until you can prove it to yourself, you could just take the price of a call, that expires roughly 30 days out and divide that by the price of the stock. And these are the highest percentages. It's easy to find a 2%er, right? So it's
What's funny
almost
right here? What's funny right here? I did this Dollar Tree. I've been doing it for a couple weeks. I actually rolled it out again, even though it shows a $5 loss. I just increased this by another 80 cents for one more week. So
now
160 more bucks on
let's
two
tell people
contracts.
let's tell the good people what is rolling.
Yeah, so let's just pop this up. Check it out. I've been selling the 100 strike put, which is, just right at the money, just slightly out of the money right now on that
Man,
expiration.
look at $6. That's it. That's just insane. This thing can't
Yeah.
move $6, right? How much you can
It,
get, folks.
isn't this crazy? That's like 6% right there.
It's insane, man.
And
And
it's
that's
sitting
why
right
I
at
said,
95.
but it's hidden in plain sight. If people will look at a chain and they're like, I show this to my friends and they're like, I don't see anything in that, right? It's hidden in plain sight. And once you learn how to read that options chain, you just take a monumental leap in your education.
I
Uh,
started this trade right back here, selling the 100 strike, just right there, right, just under that 105, 100.5. Now, I sold it originally, and this thing dropped down on earnings, and it had a juicy credit if I bought back and sold the next week out. I call it, common vernacular in this industry, rolling. When you do it in one order, where you buy it and sell the next one, doesn't matter if you gain or loss on this one, because the next one you're selling gets you more credit.
so your buy to close, the one that's open, you sold to
Yeah,
open to initiate that trade. So
yeah.
you
We
buy to
sold to
close,
open,
and
sold
then
to
you
open here.
simultaneously sell to open another one after you buy to close the one you want.
Went buy to close and then sell to open again. And hold on one second. I can pop back over here to where I actually posted that order yesterday. Pop it out, pull it over. Let's see, right here. We can see I bought the one expiring today, cost me money, sold at the same time, the one out for next week, same strike, got paid more money. The net on it was 80 cents a contract, 160 bucks total between two contracts, just to sit and wait.
Time is
Right.
on your side.
And right now I'm up like, I want to say close to $6 a contract, just sitting here waiting. And if, to me, big deal. We're touching the lows we've touched three times. One, two, three. Sitting right at my support level. I kind of expected it to come to this box. And as long as we stay in the box, I don't, and even if we dip below the box, I don't really care, because I'm going to get put shares, and I'm still quite bullish on this
Yeah.
ticker, big picture. It's
Yep.
just a temporary pullback, working through some stuff. We're probably going to fill the gap, and we're probably going to go to a new high that we've
122,
had.
130.
Yeah, I'm thinking 130 up here. So if I got put at 100, or my cost basis is down at 90 by the time I actually get put the shares, that gives me quite a nice upside potential right there. Even from 100 to 130, it's $30 a share.
Nice move.
Hey, we'll see. And Jack, you keep commenting, this is just Dollar Tree. It's a dollar store. Like, who cares? Like, who's even interested in this? And there's so much premium sitting here
I
on
know.
this.
Again, it's hidden in plain sight. And I never in a billion years would have considered looking at Dollar Tree. You did this on Urban Outfitters. You've done
Yeah.
this on so many boring stocks that are getting zero look from Wall Street. No look at all. No news, no nothing. They're just trading on their own. Not even any story, no technology, no way. Just jeans.
I got
And
put 500 shares of this back at 21 in one of my retirement accounts. And, right now, selling upside calls at 23.50. I'm already up like 3 grand in this position on 500 shares. And,
yeah, I
and
did
I,
the same thing on my IBIT. I got put at 65 and a couple of other places and immediately turn around and sell calls.
and I just keep selling, selling, selling. Eventually this is probably going to come up here to 28. So 21 to 28, that's $7 times 500 shares. And that's 3,500 total. I'm already up 3 grand, and we're only at 22.
Awesome.
It's just wild. Like,
Just
it blows my mind how much premium is available on Gap
Yeah,
right here.
of all the stocks. Now, is this strategy part of your $50,000 challenge?
It is. This is the main strategy. It's the main strategy I trade in the background. It's kind of inglorious. I call it inglorious. It's just slow, small, consistent gains over and over. I rolled a few things for more profit, but some of the ones that have booked out, you can see down here when I expanded the trades, 200 bucks, 80 bucks, 60 bucks, 140 bucks, 183 bucks that I rolled. And, that profit was over here,
You know,
300 bucks.
it's the little things that do most of the heavy lifting, you know? Just the
Yeah.
slow, small, same with fly fishing. This summer, I always wait until this time of year to fish these green drakes, which are, they could be a couple inches. And I can see them on the water floating, everything. I love it when the fish come up and take them. But I like to fish with that because I want them to take that, but they don't normally want to take it. What they love to take is a fly that is a mayfly that's so tiny you could probably fit five of them on your pinky nail. And that little tiny fly, pound for pound, has pulled more pounds of trout out of the water this summer than the big one, right? The big flashy one that I want to catch them on. I want them to eat what I'm giving them, and they don't want that. They want that little thing that is not flashy, but on a daily basis, that thing pulls out more pounds of fish than anything else. The little things do a lot of heavy lifting. And you're doing a little slow roll, under the radar type of trade and killing it.
And I do this over and over, but every now and then, like we can see on this one back in July on Rocket Lab, every now and then you catch it just right with the share appreciation and selling the covered calls, and it turns into a pretty nice trade
Yeah,
right there.
beautiful.
So,
So Pete L on AVGO, I'm going to let it roll. I'm not going to roll the trade. I'm just going to leave it on. And if I think the options are going to be out of the money at expiration, I'm just going to not do anything with that AVGO spread.
and just in case anybody wonders where the big losses and stuff are, you're looking at them right there. $5, $24, $6. These were all rolls. I rolled Docu and then rolled it again for even more profit. So
Let's take a
that's
look at QBTS for our good man, Steven.
yeah.
Well, what's your thoughts on quantum computing, Jeffrey?
Well, it's all theoretical, and to me, vaporware is just not something I invest in or trade on. And hype is great. If you want to play the price action, great. If you're playing the actual quantum computing stuff, like they don't have a single algorithm that can do it. They don't have a single piece of hardware that can really do anything except, some theoretical calculations. There's no algorithm, there's no use case, there's no nothing for this actually proved out. You can debate me all day long, but they've not found a single algorithm that can actually run faster on quantum than runs in a normal data center. So what's the advantage?
Yeah, there is none. This is a weird thing. It kind of reminds me of the nuclear stuff, these nuclear stocks. Some of them have nothing, maybe approval or something, but no real business. And these quantum stocks, same thing. I bought Rigetti Computing at 312 and sold it at 12 and thought I was a genius. But look at this
Uh,
thing.
It's doing the price patterns that I follow. It did the bounce and continuation. But if you're trading the actual like investment in this becoming a thing, even Jensen from Nvidia said maybe 10 years out before this is really usable. And he's a smart guy. Like he's arguably one of the smartest guys in this industry. And he thinks it's like 10 years out before it's practically applicable. That's a lot of years to burn a lot of cash trying
Yeah.
to figure it out.
If
And
he put his stamp of approval, even by buying a part of a smaller company like Intel or CoreWeave, that would give it a lot of legitimacy. But that guy is in the kitchen. He smells and sees what's cooking in the entire industry. And if he thought anything of it, he'd be in it, and I'd be on it like stink on a monkey. Because I don't really get it, but I get trends, and I get trading. It doesn't really even matter to me what the underlying thing is, as long as it's going higher. But long term, there's no way. I would take this for a trade, but I wouldn't buy and hold it.
you speak of Intel, that's an interesting thing I was reading yesterday was that Nvidia is working a contract with Intel to use them to make a CPU, to
Yeah.
help build a CPU for them that they're going to be launching and competing with AMD with in the not so distant future.
It's like remodeling the inside of your house. All right. Jensen and the boys are going to go in Intel and get all that crap that they have out and put the new stuff in. And the main thing Intel has going for it, maybe the only thing, is it's located in the US, right? Uh, I read an interesting story. They had one of the board members was, I think, the Wharton School of Business, and he wrote an article about all the mistakes they made, even when he was on the board. They had all these, the smartest guys in the room were on the board on Intel, and they just made one bad acquisition, one bad move after another. Even with, your academic geniuses, the management on this thing just did not work, even when you had experts running the ship. So I think Jensen will come in. He wants that location. He'll make the chip here, and I wouldn't be surprised if he took the whole thing over.
Yeah,
Consider
I
how
mean,
close NVIDIA was. They almost bought 100% of ARM when the British government stopped that from going through. But if you can imagine if NVIDIA had 100% of ARM and ARM never went public, same thing. They're just they're almost like a little hedge fund now.
yeah, look at that. I mean, right now, they could buy Intel for $140 billion.
Yeah. I mean, that'd be nothing. He's got a huge stock buyback plan. Just sell a little bit of that and you get the whole thing. Probably could even get it on a haircut, take it down 20%. You could probably buy the whole thing there.
I mean, that's only all of Intel is only about a $6 move on Nvidia.
Yeah. That's why I say this thing, I only see upside in it.
And
In
$6 of Nvidia is greater than the entirety of Intel.
Yeah. That's why I think it's a good takeover candidate, but not at a much higher price. It's just that I don't think this thing can run on its own. Just such a horrible management team, just literally unbelievable.
Yeah. I mean, it almost needs to be taken over and,
Yeah, it does. And like I say, that this US location, that's its biggest asset. The employees they have, they don't have anything like Jensen Wang has with innovation. There's zero innovation or new design or cutting edge. Intel has nothing but that US location. And there's a lot of people that would want in on that. You could expand that thing easy.
and President Trump bought a or had the government buy into Intel at 20 right down here. And now we're popped up to 30. And we could possibly see this push on out to 40 to 50 right up here.
Yeah, I would love to see the short squeeze on Intel too. Anytime a stock makes a quick, sudden move, it draws in a lot of short sellers.
And I was on the leverage ticker just then. You know, Trump bought in back here around 20. Now we're up at 30. And we could even pop it up to 40, 50 on the actual here, which if you do the math on this, pop to 40, that's about 30% upside. And feel like, all right, I want to get options, but I don't know what kind of time frame. Well, you could go to a leverage ticker like this one, buy in about the same cost, and potentially be able to take advantage of a 60% upside. The underlying only has a, maybe 30% to 40, but this one potentially going up to 60% right here. So it's kind of interesting the way, this could play out.
Does this have options?
It does. It does. They're not, not weeklies, but it does have monthly options. And these aren't super liquid. It's not like playing the TSLO. I tend to just buy these and hold them since I don't like to guess time frame on big macro plays like that, like Trump buying Intel and maybe a video gonna buy it out or something like that. So I just bought some shares of this and I'm gonna sit on it for a little bit.
Dividends weekly, Carol.
I recommend stuff like this in my supercharged alerts, and I'll talk more about that here in a little bit. But you know, supercharged alerts is where I talk about stuff playing moves like this with these leverage tickers that you don't have to worry about options. You don't have to worry about time frame. You don't like you just big macro potential and you just ride it.
Write it
So,
up. Yeah, that's a good one.
alrighty. I just made a trade. I played a debit spread on ES right here. Just got out for a 50% gain on this bounce.
Let's explain a debit spread to the good people.
So when you buy an option closer to the money, and then, a lot of people, you hear about spreads, and you can either do it and sell the spread and get a credit, or you can spend money and get a debit. And I did a debit spread, which means I bought the option closer to the money. And this was on the call side because I was looking for a bounce. And I sold an option one strike up further out of the money. And as this came up through my strikes, I just made 50% gain. I actually put it on right before we came on live, and I was sitting here watching on my other monitor, and I just got out for 50% gain right
Beautiful.
there.
Now, the reason we do debit spreads, people, is because if you just straight up buy a call, it's too expensive. I mean, you might spend, let's see what this cost. Normally
Come over here.
call
We're
can be
on.
expensive. So you lower the cost to get into a debit spread significantly. And you don't really limit your upside at all, right? You just made 50%. That's as good as it gets. So you can get 50 to 100% out of a debit spread, and you could get in really super cheap.
And these are a little different because they're options on futures are priced in points, not in dollars. So it does get a little more complicated. I'm not recommending anybody trade futures, but they're when you see the numbers here, they're points, not dollars. So, you can't multiply by 100 and get the price. Um, the points on S&P futures are 50. So when you see 1 point times 50, it's $50 instead of 100. Now that's not universal. Like if you go play NASDAQ futures, different. Go play Russell futures, different. So you got to know your point values, and you can just Google those if you want to. So
You
gold,
don't need
gold
a
points are different.
margin account for debit spreads, Jeremy. You probably would want to get an options approval, and you probably would want to get margin, but you don't have to use the margin. But let's take a look at Tesla and how this will give us a better example of how to do one and why. So
Yeah,
how
and
we
to
would do
do futures options, you got to have a futures trading account. Like
right,
that's
totally
it's a
different,
whole nother bag of wax.
whole nother bag of wax. Now, why we would do a debit spread in Tesla is like, let's say we go to next Friday's expiration. And
Come
what we
down
would do
here.
to put on a debit spread is we would buy the 322.50 here. That's the one in the money. Tesla's at 423. So we'd buy the 422.50, and you see that's going to cost you $1,260
Let me
for
pull over a
one.
live. I'm gonna pull over a live account so we can actually click this and make a. All right. So you're playing on the call side, right?
Buy one in the money,
Buy one in the money, 422.50.
and
We
that's going to
buy.
cost $1,235, right? That's to me, that's a lot for one
Yeah.
call, right?
Yeah. If I was gonna buy this, I mean, you can see the order right there. Yikes. That's a lot of money.
Right.
That's a lot of risk.
Now, if we simultaneously sell the next higher strike,
Higher strikes are down on this
we
chain
get
right here.
we get $10. So instead of, well, we get
Actually, 11
11.
bucks right now.
So we're into the trade for $120, $120 for the same trade as opposed to spending $1,230. You see
And we
how
just
much
re
That is
Just reduced the exposure by 90%.
just reduced it by 90%. You still can get a 50% or 100% upside, right? And you can do more trades in the same underlying, or you could do different because you only got a 150, $120 in this trade. That's
Now,
insane. That's why people do them.
now what you've done though is you've limited the profit to the difference in the strikes, which is $2.50. But that's still more, if this $1.20 goes to $2.50, that does cap your gains, but you just more than doubled your money.
Yeah. People say, oh, the problem with debit spreads is you're capped out at how much you could make. Well, no kidding. But if you're capped out at 100%, who cares? I mean, that's well worth to reduce the capital you have into the trade. And your max risk is your cost, Craig, right there. So yeah.
How far does Tesla have to go to double your money on a debit spread?
Oh,
About
probably.
$3,
Yeah.
about $3 to, up past 425.
And
And
that's the beauty of it right there, what you said. It only has to move $3. And typically Tesla can make a 1 to 3% move in a day or two. So, these things have massive upside potential, 50% or more in a week with $150 at risk. And
now to buy just a straight call, how far do you need it to go to double your
12.
money? You're gonna have to go $25 to double your money. Really, all things being equal, and no time decay or anything like that. You need roughly a $25 move to double your money.
Not
You need
happening.
a you need a $12 move just to break even.
Carol's made $3,172 trading Tesla the way we do it. Thank you, Carol, for
And
sharing that. I think Carol bought a Tesla too at one time, didn't you, Carol? I mean, this is Jeffrey. He loves Tesla. He has a Tesla. I think you got a Tesla too, if I'm not mistaken. Yeah, Carol, she gets the money. She gets shit. Way to go, girl. Yeah, you get it. You take your money. You
and
take it
and
in.
somebody asked, what's the max risk? When you do this right here, that's it. That's the max. There's no additional risk here. Like
This is a
whatever you spend,
debit spread, Matt. A call debit spread.
and this is a call debit spread, bull call debit spread. You know, bull call spread, that means it's a debit spread. If you're doing a bear call spread, that means it's a credit spread. You need price to go down.
Yep. We would use a bull put credit spread here because Tesla's trending higher.
Yeah, if
And
you're gonna do
buying
a
Condor would be a spread above and below the market price, which is tough because you got to give both sides right.
now, this one's a riskier trade right here. Costs the same amount, but the risk is much higher for a bullish move. This is the beauty in debit spreads. If you think about it, right here, you're getting paid $1.20 immediately, but your risk is the other way. Like if this dropped against you $3, you'd actually have to cough up the 100% loss. Plus, you cough up what you were credited plus double that. And that's why playing on the other side, you put your max risk out there to begin with, and you have a potential more than 100% gain.
Carol says she paid for her Tesla car, learning to trade options with a finger fumble. There you go right there, people. People can do this. I think everybody here has the talent and ability to do this. Carol's doing it. Everybody learns somewhere and takes it forward, and she's killing it, and you can too. Now, if we were going to do a credit spread on Tesla, what I would do is try to find some measure of support by using an EMA in there somewhere. But the gist of it is that when you're doing a debit spread, you're kind of at the money. You're buying one just below and selling one just above. But when you're doing a credit spread, I'm going to take that 410, 400, and I'm going to look to put on a spread to see if I could sell like the 405 and buy the 400 put. And I'm always going to get more money for the option I sell than I spend on the option I buy, and that's your net credit. So here I'd first look at the stock. Is it trending higher? Then go in and try to get deep out of the money. That way, if the stock continues to trend higher, it's moving away from your point of risk, right? Yeah, wow. You can
And
sell a 400 for
yeah,
350 and you make about, and you could buy the 397, you make about 50 cents
yeah,
on a
50
two and
cents.
a half. That's
That's
that's going to be about
20%.
10%, 20%. Yeah. That's hot, man. And when is that expiration you have dialed up on there?
That's next Friday. 7 days. 7 days.
Man, you look at that, you see that hidden in plain sight is a 20% trade. Carol says, ran to the bank and paid off the car. Expiration, Jeremy, on the Tesla, we do it. We'll put it on Thursday or Friday today for next Friday. So for debit spreads, I'm going to set it up for the following Friday, regardless of what day of the week I get into it. So that way you don't have to, buy a bunch of time. Yeah, right. If you got a week, you only need that 1% move in the week.
And then you're not trying to be greedy on this right here.
No, no, no. That's if I was greedy, I would get closer to the price of the stock. I want to stay at a price that has a high probability of not being reached, right?
Well, I was talking about on the debit spread, you're not being greedy. You just want 50%. You don't want the full
That's where
credit. You just
people
want
get killed. That's where people get killed. They hang on, they get a big profit, they don't sell, then they watch it go back down, and then they're mad at themselves because they didn't do anything, which is why with the debit spread, you have to set your exit. Otherwise, even if you're right, if you don't get out of it, it'll expire worthless, right? So you have to sell it and get out of it. That's why once you buy it, you take your debit, whatever that is, and you add 50% to that. So if you got in here for $1.20, you take you take 60 cents, add that to it, your exit would be $1.80. And you'd put that immediately after you got filled, you'd put that in good till cancel. And that's a 50% gainer. You don't need 100. You hit these 50 percenters, you're going to be swimming in money. But you got to put that good till cancel on the second you do it. That way, you're going to get an automatic fill. You could be out fishing, taking a nap, smoking a cigar, doing whatever, and you're going to get out. I love the good. I wouldn't do a debit spread without a good till cancel, but I don't
try
put
to.
anything in on a credit spread because I want those options to expire worthless. These options, I want them to go up.
There, I got filled. $1.18. Now, $1.18, 50% gain. Let me get my candy dandy calculator here. Actually, I can show you a trick in this platform. Let's clear it. Jump over to, I can't see the button. Grab my positions,
I'm
come
gonna
down
have to do
here.
this too. You know the
I got a
beautiful
bunch
thing
of
about
I got
credit
a bunch of
spread?
Tesla. So right here, you highlight the position, 50% gain, $1.84
Wow.
profit target.
Now put that in GTC. And
Grab
you
the,
could go watch your mower mow the grass. You could go fishing. You could just let this thing let it cook, let it do what it's going to do. And
now I got a working order sitting there waiting
yeah,
with the profit target, 50% profit target on there. I can
but
just go do whatever.
what I love about these spreads, whether it's a debit spread or a credit spread, is that the price of the stock does not matter. The only thing that matters is the difference in strikes. That's how your capital, what you got to require to do the capital. That's how that's determined. It has nothing to do with the price of the stock. So you could do spreads, debit or credit on Tesla, AVGO, any of this high flying stuff, Microsoft, it doesn't matter at all because it's just the difference in strikes, which is why it's so popular, right? Now, you're not going to get a 50% move on Tesla stock, but you could easily get a 50% move on a Tesla debit spread.
And for those that wonder what I just did, I bought to open BTO a call 422.50 strike for September 26th, did one of them. And at the same time, I sold to open STO a
Slightly
425
down.
call,
Yep.
further out of the money, cost me $1.18 total cost for both options at the same time.
118 bucks instead of 1200.
And that's $1.18 per share times 100 shares, which is one contract worth. And I just put on the exit order, good till canceled, right here. To reverse the order, we're going to sell to close the 422.50. We're going to buy to close BTC, the 425. And I want to do that at $1.84, which is the limit order. You can see limit $1.84 credit. The mid price right now, $1.15. So I've just got to wait, let it cook, as Jack says.
Yeah, Dennis, the stock has to go up. The price of the stock has to go up for the debit spread to work. But only has to go like 1 to 2%, right? That's the sweet spot, right? People don't realize a tiny little move, which Tesla normally makes a 1 to 2% move, that's a little move, but that little move could give you 50%. That's the
Yeah.
hook with the debit spreads. Now, if it doesn't work, you're gonna risk 50 to 100% of your money. And so you can't cry about that. I never get into any option trade without being willing to risk 100% of what I put into it.
Yeah, it's already moved 2% today. So that's the craziness
That's
right
what
now.
I'm saying. That's the hidden thing with this Tesla trades we got going. Yeah.
And the Tesla options are the most traded options of any single stock out there.
Even when Tesla stock isn't the most traded. Yep. So Pete L, you would put that GTC on any debit spread, call or put. You always want, once you got a debit in there, you want to add 50% to your debit, what you got in for, and then put that in good till cancel, no matter what.
Jack, I've been working on something. I want to show off. I'm not. We're gonna sell this later. I think next month. I've still got my insider group testing it. We found a little issue earlier in the week I had to address in the alerts, but I want to show this off really quickly. These are credit spreads, and this is what an alert looks like right here. I haven't had one in 2 days, but this is the last one that fired off at 3 o'clock on Wednesday, right here, and it tells you what to do. Like it says sell right there, sell the SPY September 18th, which was yesterday, so this is no good anymore. 655 put and get about $1.12 credit. And then you're at the same time you want to buy September 18th, 654, one strike down, get about 92 cents right there when you of cost. So your net credit 20 cents, close target 10 cents, 50%. You put that order on right there. You put that GTC order on for half the credit. Your risk 80 cents in this one. That's about a 12.5% return if it works on risk, return on risk. And to do $1,000 risk takes 12 contracts. And I've been working on this right here. These have like a 90% win rate. It's just absolute craziness when one of these fires off. Like I said, we haven't had one fire off in 2 days, but that's pretty exciting, isn't it, Jack?
It's very exciting. Yeah, I got something a little similar that I use, but that's really great. Dan, the next Tesla Payout Program Masterclass is coming up. I'm not sure when that date is, but we'll get an email to you about that. And you can ask me now. I mean, you could send in to support at jackcartertrading.com. Send in your question and I'll answer it today.
And there's some of the ones I've done right there. Getting in for 38 cents and getting out for 18 cents. Even
Very,
better than the 19-cent limit order I had on.
very sweet.
So,
Yeah,
and
I
those
got
those aren't
my
those
AVGO
aren't 0
trade.
days.
My AVGO trade I got from the thing I use. Let's see if I can bring it up.
And there you go. It's back up to 345, 346. Turning green for the day.
All right. Let me show you inside my screen if I could share the screen, Jeffrey.
I can stop sharing it for a second. There you go. Should be able to.
Can everybody see my screen?
Yeah.
All
And
right.
Dennis, those aren't just SPY, they're SPY, QQQ, and IWM. And they're all three.
Yeah. So this is how mine looks. You find a stock that you like, and you just press that, and it's going to analyze the credit spreads for you, fetching real-time data. And there it brings it all up. It tells you exactly your expiration 9/26, tells you which options to sell, which one to buy, your max risk, your days to expiration, shows you your break even, your cushion, your tripwire price, potential investment 45 bucks, $5 income, 9.9% per contract. That's pretty sweet. So that's how it works. You could pick any stock in here and it'll analyze it for you. Similar to yours, but I've got these set up to expire worthless. Yeah, 11.1% return. It's a
Nice.
pretty sweet little setup.
Why don't you pull up TSLL on that one? Yeah, we were talking about that one on Wednesday as an alternate way to play Tesla.
Yeah, I use this now for there's
Oh,
no opportunity. So
none
that's good to
found.
know, right? There's
Yeah,
not there's going to be one in that 7 to 15% range. No uptrend credit spreads found. So yeah, interesting. So that's how that works. And I love this thing. I rely on it quite a bit. Now, it used to take me a half hour to find my trade on Tuesday. Now, with this, I just wake up, pop this thing on, and bang.
nice.
Similar to what you got cooking.
Yeah. Well, mine's just focused on three indexes. It doesn't go out and search other stuff, and it's always a 1 day out credit spread.
Yeah, mine's always for the next following Friday. So Dennis asks, what's the win rate with it? Everyone's win rate is going to be different because it's a tool. It doesn't spit out alerts. It gives you these trades, but everyone's win rate is going to be different. My win rate is 100% with it. Knock on wood. That won't stay that way, but that's how it is now.
Yeah, I have the win rate I was quoting was a back tested win rate by the team from January 1st through July 31st on all three index options, taking every single trade. It was 89.8% win rate.
Yeah, yeah, that's good stuff.
So,
Yeah, the cash flow agent, it picks up on any time of day is good. There's a lot of coding algorithm that went into finding the right stock. Not every stock is gonna have a trade. It's gonna pull up the five best every day, but you can type any ticker you want in there and see what it gives you.
and then it's also looking for that certain ROI too, like not too
Yes,
high, not too
yes,
low.
yes.
And
Let's go back and look at yours. I don't want to spend a lot of time on this.
nah,
We're gonna do it.
yeah, let's let me
Yeah,
pull
it
this
is
one.
amazing, Carol. When they told me they were going to make this for me, I didn't believe it. I was like, how are you going to take a strategy out of my head, one that I've been using for 20 years, and how there's no way you're going to be able to make a dashboard that's just going to pop up and give me a spread in less than 1 second. That's impossible. And they did it. And I can't wait. I'm sure they got the same guys working on yours.
Actually, I wrote all mine myself.
Oh man, dude, you're killing me.
I created this entire thing myself. The entire algorithm from the alerts to the, everything. How to find the options, how to do all that stuff. Actually, my my code loads up my Alpaca brokerage account, which is I actually have alpaca.markets. This is a brokerage account for trading with code. Like it's like, where's the platform? They don't have a platform. You have to write your own platform to be able to trade here.
Let's see what you're
And
looking at. I'm still seeing my screen.
still see on your screen?
Yeah,
Let's see.
let's see what you're looking at.
Let me reshare. Try this one more time. You should be able to see me here. It says I'm sharing. Everybody see the alpaca markets?
No. I still see my cash flow agent.
Yeah, you might want
I'm
to.
seeing the alpacas. Jeffrey, you're good on my end.
All right. Yeah, Jack, you got something up, man. You have to find Zoom.
Well, what the heck? All right, I see you now.
All right. Here's yeah, this is just Alpaca's website right here. And yeah, you have to actually use code to trade here. Now they do have it plugged into TradingView and you can use TradingView to trade here, but so my code does something like what you see showing up on the screen here, and it does load the real-time option prices and then throws those over into Discord with the alerts right now. And it's pretty slick stuff.
Very
I think
slick.
it's pretty slick. It took me almost 3 months of tinkering with it to be able to get the actual real live market prices at the right spot and feel confident about it before I started giving it to members. And I've taken all the feedback on all my other automated strategies and just really simplified these down with just the information you need. You know, people want to know where's the exit alert. You, like Jack says, you put on the exit right after you get in, and then you just let it cook. And the only time you got to take action is if it doesn't close by like 3:50 the next day. And maybe mine closed and yours didn't. I don't know. So I can't really give you an exit alert, but you gotta set that timer if you get into one of these. And it's not an automated thing. Like I don't have code that'll do it for you. You have to take the instructions here. And like I said, Jack and I will probably launch this out and make it available to the public
Yeah,
sometime next month, about a month from now. I think
cool.
around October 12th is what we're thinking. And but this is really cool. If you want to test it now, if you want to be in my insider group and test it, then I'll drop a link in the chat here. But you got to be in my all access group, and there's an application that I'll throw in the link for it right here, trader.com/inquire. You can fill out that form if you want to know more information about this right now, or you want to come and participate with it while we're testing it. But some of my members already, like, first one I did right there, did the full number of contracts and, closed out at the target right there, first one. So that's the kind of experience people have been having.
Beautiful. Good stuff.
But looks like your AVGO is doing pretty good right now, Jack. I have to
Yeah,
say.
I'm gonna go fishing then and come back later and see what's happened.